Hello, everyone, and welcome to today's episode. I'm Abhishek V, Business Process Manager at Summer Atlantic Capital. Today, we're diving into a topic that's shaping capital allocation globally, where AI money is actually moving in 2025, beyond the hype, beyond the headlines. Joining me is Sebright Chen, CEO of Summer Atlantic Capital, who works closely with institutional investors, sovereign funds, and long-term allocators tracking AI across sectors. Sebright, great to have you with us.
Great to be here, Abhishek. Looking forward to the discussion.
Sebright, AI has been a dominant narrative for the last 2 years. From your vantage point, how is 2025 different from 2023 or even 2024 when it comes to AI investments?
Great question, Abhishek. The biggest difference in 2025 is discipline. Earlier cycles were driven by infrastructure excitement, GPUs, foundation models, raw capability. Capital chased scale and novelty. In 2025, investors are far more selective. The question is no longer, is this AI, but does this AI produce defensible cash flows, margin expansion, or cost compression? We're seeing a shift from horizontal AI enthusiasm to vertical sector-embedded intelligence.
That's interesting. So, would it be fair to say that pure AI companies are no longer the center of gravity?
Exactly. In fact, many investors are actively avoiding companies whose only story is AI. The capital is moving toward AI as an operating layer, not a product label. For example, AI-native tools embedded in financial risk, supply chains, industrial automation, and compliance workflows are attracting far more serious capital than standalone AI platforms. The winning companies don't sell AI, they sell outcomes. And AI just happens to be the engine.
Let's get specific. Which sectors are seeing the strongest investors pull right now?
Financial and capital markets AI is clearly at the top in 2025. Institutional investors are allocating capital toward portfolio intelligence platforms, risk and liquidity modeling, cross-asset decision AI, regulatory and compliance automation. The driver is simple. Capital markets are information dense, regulation heavy, and margin sensitive. AI delivers immediate ROI here, faster decisions, better downside protection, and operational leverage. This is why sovereign funds, pensions, and large asset managers are prioritizing AI that touches capital allocation decisions, not consumer-facing tools.
We heard a lot about chips, cloud, and compute. Is infrastructure still alive in 2025?
Infrastructure remains important, but it's no longer the alpha trade. In 2023 to 24, infrastructure was a scarcity play. In 2025, it's becoming commoditized. Margins are compressing, and hyperscalers dominate in economics. Investors are now asking, who captures value on top of infrastructure? That's where application layer intelligence and sector-specific AI win.
What about industrials and supply chains? They do not always get the spotlight.
They absolutely should, and investors are paying attention now. AI applied to predictive maintenance, inventory optimization, logistic routing, energy efficiency is seeing strong inflows, especially from long-horizon capital. These systems reduce downtime, working capital needs, and operational volatility, outcomes that browse and CFOs care deeply about. This isn't flashy AI, but it's sticky, defensible, and mission-critical.
Healthcare AI gets a lot of media attention. Is capital equally enthusiastic?
Cautious optimism is the right phrase. AI in healthcare diagnostics and discovery is compelling. Regulatory timelines, liability risk, and adoption friction slow capital deployment. Investors prefer healthcare operations AI, revenue cycle management, hospital workflow optimization, and payer analytics over purely clinical bets in 2025.
So that's what capital is moving toward. What is it moving away from?
Three things mainly. The first is AI without data modes. Second is AI tools with unclear buyers or budget owners. Third is consumer AI with weak retention economics. Investors are then funding demos. They want embedded systems, long contracts, and switching costs.
Given Summer Atlantic Capital works with long-term institutions, how do sovereign and pension investors view AI in 2025?
They view AI as infrastructure for decision making, not a speculative bet. Their focus is on capital preservation, risk-adjusted returns, long duration relevance. So they allocate toward AI that improves how capital itself is managed. Portfolios, liabilities, sustainability risk, and macro exposure. This is a very different mindset from venture-style growth chasing.
To close, if you had to summarize where AI money is really moving in 2025, how would you put it?
AI money is moving away from stories and toward systems, away from hype and toward decision advantage. The winners are not those building the smartest models, but those embedding intelligence where capital, risk, and operations intersect.
Well, that's a powerful note to end on. Sebright, thank you for sharing such a grounded and investor-focused perspective. And thank you to everyone listening. We'll be back with more insights on global capital, technology, and strategy. Until then, it's your host Abhishek Vinod signing off. See you all next week.